Quick one here on nat gas, gold, silver, crude oil. I'm also going to go through US cocoa today, starting with natural gas. So starting with NEMEX platform right here, we are still below 50 EMA and trading below 50 EMA, nicely below 50 EMA, a continuation towards the downside. Now the zone below, which is right here, 2.132, that goes to 2.260, and the zone above right here, 2.568, that goes to 2.679. So we have two zones, one above and one below. So number one, I'll be looking at a pullback to 50 EMA. In that case, we'll have a good pullback, and if we have a bearish engulfer, in that case we are good to go short. Otherwise, if this candle turns to be a valid bearish engulfer, must cover the previous candle with the whole body. If we have that, we are good to go short. In that case, I'll go 1 ATR from a target, and then you can manage it till this recent low or till this support area right here. Otherwise, if there is no condition here, wait for the price to give you some more pullback, must be below 50 EMA. In that case, we are good to go short. Otherwise, the zone I've just mentioned, if we have a pullback to this zone without any condition, with the bearish engulfers and double top, in that case, we are good to go short as well. So for me, for my bullish trades, I want to see a complete break above 50 EMA with a good momentum and possibly above this zone as well. But once we are above 50 EMA, we can start to look for the short-term bullish trades until we are completely broken above the zone here as well. So that's what I'll be looking at for nat gas. Look for the condition I've just mentioned. Once we have a condition, we are good to go for the trades. Here on capital.com, we have zone below and one above, which is 2.085, that goes to 2.230. And the zone above, 2.470, that goes to 2.575. So we have two zones, one above, one below. So in that case, what we are looking at, a pullback to this zone or below 50 EMA, followed by bearish engulfer. That would be a good and strong entry after this good pullback. As you can see, we do not have any good pullback, so this can be a correction, a pullback with a bearish engulfer, a good entry condition. After the correction, we can get a possible push lower to the zone from where we can start buying with conditions like bullish engulfers or double bottom, one of my buying condition which I usually mention in my videos. So that's what I'll be looking at, not buying unless and until we have broken above 50 EMA with good momentum. Here on Oana, exactly the same, zone above and zone below, which is 1.965, that goes up to 2.057, and zone above 2.307, that goes to 2.462, where the price is currently inside of. Now all we want to see, maybe a double top here, or a bearish engulfer. We can see one green candle and then the next bearish engulfing pattern. If we have that, we are good to go short. So otherwise, I'm just looking at this level, or once we have broken below this low, we can then start to look for the pullback entry, bearish only. For aggressive trader, 50% entry has been triggered. Take profit can be 1.618 retracement, stop loss above, and you can go 1 ATR for initial targets as well. That's totally up to you how you want to manage this trade. An aggressive entry has been triggered here as well, in case you're wondering, on capital.com if you are aggressive trader. Next up, we have gold. It pushed down nicely from the zone I've mentioned to members and in my videos as well. So we also have this flag pattern or symmetrical triangle right here on gold. So once we are completely broken above, not wicks but with the body, in that case we'll have an aggressive entry. And aggressive entries are risky. Make sure you follow your proper risk management. Stop loss can be below the pattern. Take profit 1-to-1 initially, then you can manage it till the top or till this resistance level, which is 2.386, that goes to 2004.18. And if we are broken below this pattern, in that case we are pushing lower. So keep an eye. We are still bullish. My bias is still bullish because we are trading above 50 and 20 EMA. In case you're wondering, that is not a valid bullish engulfer. If you see the candle opens above, so that is not a valid bullish engulfing candle. So I'm not taking it as a valid bullish entry. So still wait for the price to come down in this rejection box. Rejection from A like bearish engulfers or inverted hammers or 382 candle in this zone. In that case, we are good to go short. So wait and see how it goes. So still bullish as long as we are above 50 EMA. Once broken below 50 EMA, let's say we have a dramatic news event and price broke below. In that case, after the two red candles, I'll start to see from my bearish trades only. Next up, we have silver. We are still inside the anchor level, exactly same as gold. I want to see some more pullback followed by bullish engulfer above 50 EMA. If we have that, we have a valid buy signal and a strong entry, as we are now in the anchor level as well. A bullish engulfer, something like this, if we have that inside the zone. Otherwise, we do have a symmetrical triangle, or you can call it a flag pattern as well here on silver. Once we are broken above, we might see some move inside this pattern, and once we are broken above with the candle, as you can see, wicks has attempted to break above, but every time it attempts, it pushes lower. So all I want to see, a complete break above with a candle. If we have that with the body, then we have a signal, aggressive entry. Stop loss can be below the pattern, and take profit, you can go 1-to-1 initially, and then you can manage it accordingly. So broken above will be an entry, and if we are broke below, in that case we have a chance the price will fall to the trend continuation bullish area, which is right here in green for the next possible trades. Again, my bias is bullish, looking at the nice bullish momentum, and we have broken above the previous high triangle pattern, and break above will be a possible and likely entry to the next level of resistance right up there. Next one, we have crude oil. Crude oil is now pushing lower. We have broken below and we have good momentum now. We are good to see pullback. If you have a pullback followed by bearish engulfer, I'm only going to go short. So I'm not interested in taking buy trades. Now we are trading below 50 and 20 EMA. My next buy trade will be from the zone below, which is right here, 78.83. That goes to 80.60. If the price falls to this zone, forms bullish engulfers or double bottom, this is an area for me to look for a little scalp or a bounce before the price will decide if you want to break above or break below. So I'm expecting a bounce from here, at least 1 to 2 ATR bounce from this zone, or you can go to 1.4 to 1 risk to reward ratio. That's totally up to you. Once we have an entry condition, I'm going to update you guys as well. Last one, we have US cocoa. So as mentioned in my last video, we have a good bounce from the level right here, but we still did not get a possible double bottom. If we have that, a push down in this rejection box, in that case we'll have a valid double bottom and we're going to go long from here. Otherwise, if the price is above 50 EMA, this red line is above 50 EMA. If we have at least 2 candles above 50 EMA, then I'll start to look for bullish trades only with a pullback followed by bullish candle. So once we have broken above, then we have a confirmation that the price now wants to push up and keep on pushing higher. But we're only going to enter with condition. Once we have a condition, we're going to keep on taking longs till we are at the anchor level or resistance level right up there. So break above 50 EMA, then we have a possible chance the price will shoot up from here. But that's it for commodities, guys. Hope you're getting value. If yes, hit the like button for me. Subscribe if you're new so that we can all trade together and trade efficiently. Hope you trade green. I'll see you guys in the next one. Till then, take care.